I want to go right to this question that people are raising. Is the pressure building on the BOJ to do something with the yen under so much pressure, the government spending so much money to boost it? You say and others there won't be any change. Why not? Does Kuroda at some point have to do something?
Well, first of all, the inflation rate is comparatively very low to the U.S. and Europe. So headline is 3%, and excluding fresh foods, 3%, and excluding energy and fresh food, it's 1.8%. So still below the 2% inflation target. It may go up a little bit from here, but the next year it's projected to go down as oil prices and gas prices will be plateaued for a year. Then contribution to the inflation rate will go down. So, there is no reason to hike the interest rate. And still, also the GDP is still very weak, and there is a large GDP gap. So from monetary policy textbook, you shouldn't raise the interest rate. Now,
you do think, I think this is so important, you think they could tweak yield curve control, the ceiling on the 10-year JGB. What could they do, and why would they do that now? How can they?
So yield curve control is putting a ceiling on the 10-year bond rate. And that can be adjusted if necessary or if it is seen appropriate. The reason is that, well, it's 10-year bond rate. So do you think that low interest rate will continue for 10 years? Probably not. Maybe, this 2% inflation targeting will kick in, maybe not, if not next year, next year, and so on. If the government stimulus works, then you could make a sort of hypothesis or the theory that, yes, in 10 years, we are confident that economy will be back and you can raise the 10-year bond rate. And also, having a steeper yield curve is good for the commercial banks. So that should be welcomed by the commercial banks.
Oh, just some breaking news. Prime Minister Takatoshi announcing 29 trillion yen extra budget for stimulus, and the total size of the economic stimulus at 71.6 trillion. Speaking of the government, there's a lot of conjecture right now about how when Kuroda steps down in April, that maybe that's when the government will say, we can exit this ultra dovish policy, pressure on the yen, and start on a more less dovish path, not exactly hawkish, but heading in that direction. Do you think that's what the government wants to do?
Well, it's kind of a self-defeating policy, right? Because raising the interest rate means that it will be bad for the economy and also bad for those large deficit and large debt. So it should be combined with the more restraint on the spending. Otherwise, it's going to be a really large impact on the economy. And also, if you don't like yen depreciation, then the intervention is the answer, which they did in September 22nd and again last week. So targeting the exchange rate is not in the mandate of the BOJ.
But the intervention has proved to be not exactly long-lasting, right? Is the strategy to intervene to try and keep levels on the yen somewhat stable? They obviously just don't want it to get to 160, 170 very quickly, hoping that the market tide will turn. Is that a sustainable strategy?
I think we've got to have a retake of that. We're having a little bit of difficulty. The intervention Heidi was just asking about, how, to the extent they have to do it, what that means then for BOJ policy and how what's going on complicates things for the government.
Well, there's no conflict between the BOJ policy, the dovish policy, and the intervention. There are two targets, the exchange rate and the inflation, and intervention is targeted to the exchange rate, and monetary policy is targeted to the inflation. That can be done policy assignment to the two targets, two instruments.
Oh, okay. I want to actually continue on this line of where we're going next, but particularly on this question of YCC. What will they say? If they're changing it, what do we expect to see in the policy statement? What do we expect to hear Kuroda ask? Right now, the range is plus 0.25 to minus 0.25. Mm-hmm. What kind of shift could they make? How big of a step would they make? And again, what will he say? How will he explain it?
In this meeting, I expect there is no change. But going forward, if the inflation rate becomes higher, and if the wage becomes higher, then there is a basis to argue that in the long run, maybe we can start raising the allow higher long-term interest rate. So it depends on the data, and but I think the order of change would be YCC and policy rate and QT.
But not today, you're saying?
Not today.
Not today.